It's a dream for many, a symbol of stability and achievement. But let's be honest, the mortgage process can feel like navigating a financial maze. There are mountains of paperwork, complex terms, and a constant feeling of, am I doing this right? One major pitfall to avoid: sneaky mortgage traps. These hidden clauses, surprise fees, and tricky loan structures can derail your homeownership dreams faster than you can say an adjustable rate. They can leave you feeling financially squeezed, house rich and cash poor, and wondering how your dream home turned into a money pit. What are sneaky mortgage traps? Imagine this: you find your perfect haven, a house with a porch swing whispering promises of summer evenings and a backyard begging to be a playground for laughter and memories. You get pre-approved for a mortgage, everything seems on track.
Then BM.
Hidden fees materialize out of thin air, the interest rate mysteriously inflates like a runaway balloon, or the repayment term stretches out longer than a never-ending yoga class. These are sneaky mortgage traps. Lenders might not always explain them clearly, using confusing jargon and overwhelming you with a paperwork avalanche. Before you know it, you're stuck with a mortgage that costs more than you ever imagined. Surprise fees, high interest rates, and hidden charges can drain your savings faster than a leaky faucet. Suddenly, your dream home feels more like a financial burden. Has a repayment schedule that makes you sweat. Unrealistic loan terms can saddle you with monthly payments that strangle your budget and leave you gasping for financial air. Saving for other important things becomes a distant dream. Limits your financial flexibility. Some mortgages come with strings attached, restricting how you can use your money. Forget saving for emergencies or investing in your future. All your financial resources go towards keeping a roof over your head. These traps can turn your dream home into a financial nightmare. So, let's shed light on these sneaky tactics lenders might use and equip you with the knowledge to avoid them entirely. By the end of this video, you'll be a mortgage trap spotting ninja, ready to navigate the home buying process with confidence. Common sneaky mortgage traps. We're about to rip the mask off these sneaky mortgage traps and expose their deceptive tactics. These aren't some secret ninja assassins lurking in the shadows, but rather cleverly disguised pitfalls hidden within the fine print. Let's shine a light on their most common disguises so you can avoid them entirely. The adjustable rate mortgage ARM shapeshifter. This trap might initially lure you in with a low introductory interest rate. But don't be fooled by its charming facade. This rate has a nasty habit of morphing into something much higher later on, potentially squeezing your budget and making your monthly payments balloon. Remember, an ARM can be a ticking time bomb for your financial stability. The negative amortization illusionist. This sneaky trick makes it seem like your loan balance is shrinking with each payment.
But wait.
There's more to the story. With negative amortization, your payments only cover the interest, not the actual principal amount. This means you're actually owing more money over time, a financial disappearing act you definitely don't want. The private mortgage insurance, PMI shadow. This extra fee can appear out of nowhere, especially if your down payment is less than 20% of the home's value. While PMI protects the lender if you default on the loan, it does little for you and can add hundreds of dollars to your monthly payment. Be aware of PMI and factor it into your budget calculations. The hidden fee hydra. This trap loves multiplying. Origination fees, processing fees, appraisal fees, the list goes on. These seemingly small charges can add up quickly, draining your savings and leaving you with less wiggle room for other expenses. Be sure to ask about all potential fees up front and get them in writing. The unrealistic loan term siren song. Qualifying for a larger loan might seem appealing, but it can be a dangerous game. Don't get hypnotized by the illusion of affordability. A longer loan term means more interest paid overall, potentially putting a strain on your finances for years to come. Choose a loan term that fits your budget comfortably. How to outsmart the mortgage maze. Escaping the traps alright, we've exposed the sneaky tactics lenders might use. But knowledge is power. Here's your battle plan to navigate the mortgage maze and avoid those hidden traps entirely. 1. Become a mortgage rate bloodhound. Don't settle for the first offer that comes your way. Shop around and compare rates and terms from multiple lenders. Think of it like hunting for treasure. The best rates and terms are your prize. Get quotes from banks, credit unions, and online lenders. A little legwork can save you a significant amount of money in the long run. Point 2. Ask questions like a relentless reporter. Never be afraid to ask your lender questions. There are no silly questions when it comes to your financial future. If they can't explain something clearly or try to brush you off, consider it a red flag. The best lenders will patiently walk you through every step of the process and answer all your questions in detail. Point 3. Get pre-approved. Your financial armor. Pre-approval is like putting on your financial armor before entering the mortgage battleground. Knowing exactly how much you can afford upfront gives you leverage and bargaining power. It also prevents you from getting talked into a loan that's outside your budget. It shows sellers you're a serious buyer and strengthens your offer. Point 4. Decipher the fine print. Your mortgage decoder ring. Yes, reading the fine print can be tedious, but it's crucial. Don't let fancy jargon or overwhelming paperwork deter you. This is your mortgage, and understanding every fee and term is essential. If something seems unclear, ask your lender or a trusted financial advisor to explain it in plain English. Point 5. Fixed rate mortgage. Your steady compass. Consider a fixed rate mortgage for stability and predictability. With a fixed rate mortgage, your interest rate stays the same throughout the loan term. This means your monthly payment will also remain consistent, making it easier to budget and plan for your future. It provides peace of mind knowing your housing costs won't fluctuate with the market. Point 6. Partner with a trusted mortgage broker. Your financial wingman. A mortgage broker can be your secret weapon in the home buying process. They work with a variety of lenders and can help you find the best possible deal based on your individual needs and financial situation. They act as your advocate, negotiating rates and terms on your behalf. Look for a broker who is experienced, has a good reputation, and is upfront about their fees. By following these steps, you'll be well equipped to navigate the mortgage maze and avoid those sneaky traps. Remember, buying a home is a big decision, so take your time, do your research, and don't be afraid to ask for help. With the right knowledge and tools, you can find the perfect mortgage that fits your budget and sets you on the path to homeownership success. Buying a house is a huge decision. By educating yourself about sneaky mortgage traps, you can avoid financial headaches and make a confident, informed decision. Remember, a home should be a source of joy and security, not financial stress. If you have any questions about mortgages, leave them down in the comments below. And don't forget to like and subscribe for more real estate and personal finance content.
See you next time.